Okay, dear students, let's just start our very first live revision class of Financial Management FM for the current session, which is September 2026. What exactly we'll be covering in our live revision classes? Actually, in our live revision classes, I'll give you the revision of entire course, but the entire course revision will be through questions. Number one. Number two, we'll be discussing all the questions and it either from section A, B, and C. But all those questions, they will be the new questions. They are not already recorded on the portal because something which is already available on the portal, you can watch it. So one, you will be getting, inshallah, the revision of entire financial management, but through questions, and all the questions will be the new questions which we already don't have on our portal. Okay. So in this way, actually automatically your question bank will also increase. And like I think at least 3 days or maybe 4 days before today's class, ASA management, they have shared the, I would say, message in your relevant WhatsApp groups where we did mention the topic. In today's class, we'll be covering revising the investment appraisal. And this question, I've taken this question from the pre-seen mock of June 2026, and this question is already not available on our portal. So that is why I've just mentioned we'll be revising each and everything through questions, and you will find all the questions are new. First, I'll be explaining all the main concept of this question on the OneNote, and after that, we'll be solving this entire question on the spreadsheet. Because we know that in exam section C questions, you will be solving on the spreadsheet. The main difference which you might have experienced if you have given any other paper before FM, if not, then you will be experiencing that difference. Let me tell you, the main difference is going to be the Excel which we use at home, even at offices, they are very fast as compared to the spreadsheet which you will be getting in your real exam. That is, I would say, on a bit slower side. Yes, each and every class will be uploaded on the portal. So obviously, I would say majority of the students are not here today. Maybe this timing is not suiting majority of the student. There's a possibility. So exactly within after as soon as the class ends, in next 2 to 3 hours, the class will be uploaded on the portal, and there's going to be a one folder, and the name of the folder is going to be, or caption of the folder is going to be live revision classes for session September 2026, so that you should not have any difficulty to find out where to see the revision classes. Okay. So due to any reason, if you are unable to attend the live revision class, you will be getting the recording will be available to everyone. Either you have attended the class or you did not. So I think I have explained each and everything regarding agenda of our live revision classes for this FM, and already students topical revision is already uploaded on the portal. Okay. So this time you'll be getting question based revision, and each question is going to be new. Plus, obviously, each week you will be having the opportunity to have the interaction directly with your tutor. Otherwise, WhatsApp support is available whenever you get stuck anywhere. You can directly ask the question. I think I did mention many times also. We do not keep any teacher assistant, so all the queries will be responded by directly by me. So in that way, there will be no confusion at all. Let's see what they are asking in part A. Calculate NPV of the proposed investment and comment on its financial acceptability. Now listen, for example, if NPV of the project is negative, assuming, okay, then what comment you will be writing? Then simply a single line you have to write that NPV of the project is negative, okay, which will reduce the wealth of shareholders. So this project is not financially acceptable. Let's say if NPV becomes turn out to be positive, what will be our comment? The comment will be very simple, a single line, that NPV of this project is positive, which will increase the wealth of shareholders. So the project is acceptable. And this single line comment you have to write on the spreadsheet. Just for this single line, I will not recommend go on the MS Word and write it. Does not make any sense. once you have calculated NPV, after that, it's just a single line comment you should be writing under your NPV calculation. Okay. But if someone is not writing this financial acceptability, you know, either your NPV is negative or positive, even you have calculated NPV, let's say incorrect, assuming you did not calculate the right answer of NPV, but if your interpretation, your comment on financial acceptability is correct, you will still get 1 mark. So there's a 1 mark on writing a comment on financial acceptability, you will get 1 mark, no matter your answer is correct or wrong. But if someone is not writing a single line on financial acceptability, then you will be losing a very simple 1 mark. Okay. One more thing, try to show the calculations. I'll tell you where to, you should be showing the calculation. Sometime when you do each and everything directly, then you also lose marks. Let's read the scenario. Veloice company is a profitable company. Okay, fine. It's considering a new project to manufacture a new product called V Pro. Wow. The project requires an initial investment $1.2 million. Okay. For new machinery, payable immediately. This machinery is expected to have a 4-year economic life, after which it will have it will be sold for a scrap value 200,000. So initial investment is 1.2 million, scrap value is 200,000, and the life of the project is 4 years. Till here, everything looks simple. For tax purposes, the company pays corporation tax 20%. Okay. Most of the time in the past paper, I've noted they go with 30%. But this time they said, no, enough is enough. Let's have a tax at 20%. Okay, fine. With payment made 1 year in arrears, so there's a delay of 1 year. It means T1 tax will be paid in T2. It means T4 tax will be paid in T5. Even though the life of the project is 4 years, but the impact will go for till 5 years. The company can claim tax allowable depreciation on investment at a rate of 25% per annum on a reducing balance basis, with any balancing adjustment occur upon on the disposal of the asset. Now, in the last year, actually, we have to take the balancing figure. If I just show you a little calculation how to deal with this. Whenever capital allowances are available, student, if you recall, you have to just calculate tax saving from capital allowances. How to calculate tax saving from capital allowances? I'm just giving you the idea. Then we'll be properly solving that on our spreadsheet. Okay. For example, again, I'm just giving you the idea. Okay. Please try to understand. For example, working one. Okay. Let's say the time is T0, where I'll be making the investment, T1, T2, T3, T4, and T5. It is up to you how you show the presentation. I'm ignoring 3 zeros for the sake of simplicity. Let's say the initial investment, we know that is 1200. Okay. Now, tax depreciation is 25%. Okay. I'll take 25% of 1200. If I take 25% of 1200, it is 300. Then how do we calculate tax saving? Very simple. Tax depreciation multiplied by tax rate. Tax depreciation multiplied by tax rate will give us tax saving. Tax rate is 20%. If you multiply 20% with 300, you will be getting a tax saving of 60. Why it is coming from the why we are taking tax saving from the second year? Because tax is paid with a delay of 1 year. Logically, first year tax will be paid in second year. So your first tax saving will arise in the second year. After that, student, just take 75% of this. I have explained the shortcut in my regular classes. It is 225. Now take 20% of 225. It is just a minute. If I take it was here. If I take 20% of 225, I'm getting 45. Then 225, take 75% of 225. I'm getting 168.75, so with a rounding of 169. Then take 20% of 169. I'm getting 33.8, make it 34. In the last year, student, if you recall, we used to take balancing figure. How to calculate balancing figure is very simple. Let me show you. Actually, the concept behind balancing figure is very simple. If you recall IEA 16, then according to IEA 16, only depreciable cost should be depreciated. Depreciable cost means cost minus scrap value. Depreciable cost means cost minus scrap value. So the cost is 1200, scrap value is 200. So it means depreciable cost is 1000. Already how much we have depreciated? 300, 225, 169. If you deduct 300, 225, 169 from 1000, you will be getting a balancing figure. So in the last year, we have to just take the balancing figure. I'm getting, students, balancing figure 306. Now, if you take 20% of this 306, I'm getting 61.2, make it 62. Make it 61. Just a minute. Now, look at this. Instead of this, or it is just up to you how you show the presentation, okay? If someone says, I'll show the presentation like this, time, T1, T2, T3, T4, T5, tax depreciation, okay, tax savings. 1200, take 25% of this, I'll be getting 300. After that, just take 75% of 300. You will get 225. Then take 75% of this. 225, 75% of this is I'm getting 169. In the last year, student will be taking a balancing figure. How to calculate balancing figure? I've already explained. According to IAS 16, only depreciable cost should be depreciated. Depreciable cost means cost minus scrap value. Cost is 1200, scrap value is 200. So here comes depreciable cost 1000. From this 1000, I'll deduct 300, 225, 169. So I think the balancing figure which we have calculated, it was 306. Categorically, you have to write balancing figure so that whoever checks your copy knows that it is a balancing figure. After that, student, just tax depreciation multiplied by tax rate. Tax depreciation multiplied by tax rate will give you the tax saving. And tax saving will start from the second year because tax is paid with a delay of 1 year. So after that, it was, I believe, 34 and 61. These are the tax savings. So obviously it is on the discretion of the student, which presentation student, any student, it is up to everyone, which presentation you actually need to follow while calculating tax savings from capital allowances. Okay, now come back to the question. Okay, after that, they are saying sales are projected to be 10,000 units in the first year. Now stop. 10,000, they have categorically written 10,000 units in the first year. So how many units will be selling? 10,000 units company is going to sell in the first year. Are forecast to grow by 5% annually thereafter. So this 5% growth impact in the sales volume, we have to consider from the second year. Sometimes student, they make mistake which are unexpected errors, like if you incorporate that 5% from the first year, it means you're making a mistake. If you read the question slowly, it's not difficult at all. It is categorically mentioned 10,000 units are in the first year, and the impact of the growth will come from the second year. Okay, which means that I'll come to this just a minute. If I just write working 2, okay, and let's say we are calculating sales time T1, T2, T3, T4. I'm just calculating sales. I'm ignoring 3 zeros for the sake of simplicity. Sales volume. Now try to understand. This volume will increase 5%, but actually it will increase from T2 till T4. In the first year, I'm just writing 10 because I'm ignoring 3 zeros. Now this 10 will increase by 1.05. So 10 multiplied by 1.05, the impact of the growth comes from the second year. It is 10.5. Now in the next year, just multiply this with 1.05. You will get the volume for the third year, which is 11.025. Then 11.025 multiplied by 1.05. Students, I am getting 11 point, let's say 576. After that, actually, we need selling price. Selling price per unit. Let's see what question says about selling price per unit. A selling price 150 per unit in current price terms. Now, students, stop. In my regular classes, even in a very first class, if I'm not wrong, we have discussed this concept. Whenever the question says current price term, actually current price means price at time 0. So whenever the question says current price term, or the question says above prices are without inflation, it means that you have to include inflation from the first year. Current price term means price at time 0. So we have to include the inflation of 3% from the first year. If the question says first year price, listen to me carefully, students. If the question says first year price, then you have to include the inflation from the second year, because first year price means inflation of first year is included in the price. But whenever the question says current price means logically price at time 0. So you have to include the inflation from the first year. Now come here. Look at this. Selling price is 150. Okay. What I'm doing, multiply this with 1.03. Now 150, I want to show you here something where some of the students, they just get confused. I'm taking power 2, keep watching. Then third year, I'm taking power 3. Then fourth year, then I'm taking power 4. Now some of the students, they just get confused without, I don't know why they get confused. Let me show you. Now, instead of this presentation, now listen to me carefully, students. What I'm doing, let me just show you. In fact, let me first calculate the sales values for you, then I'll show you something else also. 10 multiplied by 150 multiplied by 1.03. Students, I'm getting 1545. Okay. Then here these are 10.5, okay, units. Now keep watching what I'm doing. 10.5 multiplied by 150 multiplied by 1.03, the power is 2. I'm getting with a little bit rounding of 1671. Then here, actually your units are 11.025. Now listen and keep watching. 11.025 multiplied by 150 multiplied by 1.03, the power is 3. I'm getting 1807. Then in the last year, 11.576 multiplied by 150 into 1.03 and the power is 4. I'm getting 1954. Now listen, student. Instead of this presentation, if someone solves the same thing in a little bit different presentation, let's see what other presentation is possible. T1, T2, T3, T4. Okay. Sales volume. I've ignored 3 zeros here. 5% is growth from T2 till T5. It was 10, 10.5. Then we have calculated 11.025. Then it was 11 point. Now let's talk about the selling price per unit. Okay. Plus inflation 3% per annum. Now keep watching. If I take in the first year 150 multiplied by 1.03, I'm getting 154.5. Now listen, if we multiply 154.5 with 1.03, if I multiply this with 1.03, I'm getting 159.135. Now, if you multiply 159.135 with 1.03, I'm getting 163.90 something, and then multiply this with 1.03. I'm getting 168.826. Now listen. Just keep watching, please. Otherwise, some of the students, they just go for rote learning. Sir, when to take the powers, when not to take the powers. Students, very simple calculation. You should not be making any errors in this. Now look at this. 10 multiplied by 154.5. I am getting 1545. 10.5 into 159.135. I'm getting 1671. 11.025, 163.9. I am getting 1807. 11.576, 168.826. I'm getting 1954. Look at this. All the results are identical, they are same, but there's a difference in the presentation. So students, I would request, instead of going for rote learning, which will not give you the benefit at all, you should know the concept. I've already included 3% inflation here. In the next year, again, it is 3%. So if I just multiply this with 1.03, I'll get the selling price of the second year. To calculate the second year selling price like this, or take 150 and multiply this with 1.03 the power 2, you will get the same result. You will be getting the same result. Here actually 150 is same. I'm incorporating inflation 3 times. Now come here. Logically, this selling price 163.9 is the price in which we have already incorporated inflation 3 times. So power 3 impact is already built in this 163.9. So I strongly believe now you should be able to deal with the different presentations. Otherwise, sometimes what happens, a student, when they see a little bit different presentation of the examiner, they just get confused that we were taking powers, examiner is not taking powers. So actually, that's why I've discussed all the possible presentations so that you should be able to you should be able to understand the examiner's answer. So I would request, try to understand each and everything rather than going for the rote learning. That will not give you the benefit. Okay. Now come here. Contribution is 60%. So it's very simple. Once we have calculated sales, then take 60% of the sales, you will get contribution. Now listen to me carefully. If any one of us, instead of taking 60% of the sales and calculating contribution directly, if someone takes 40% of the sale as variable cost, it's perfectly fine. When you will be deducting 40% variable cost, so logically you will be getting a contribution of 60%. So it is up to the student, directly take 60% of the sale as contribution or deduct 40% variable cost from the sale. Both are 100% acceptable, no issue at all. Fixed costs are 2,50,000 per year in current price terms. First of all, the question says current price terms. It means inflation we have to include from year one. Inflation is 2% per year. This includes 100,000 of centrally allocated overheads to cover head office costs. Now listen, student. In my regular classes, I have categorically mentioned allocated overheads are always irrelevant. Now your examiner says overheads are 2,50,000. Try to understand. Out of this 250, the examiner says 100,000 is logically irrelevant. Now try to understand, student. If if your examiner says overheads they are 250, okay, fine. And then examiner says out of 250, 1 lakh is irrelevant. It means the relevant overheads are 1,50,000. So relevant overheads are 1,50,000. We have to work on this relevant overheads, which is 150, plus we will incorporate the inflation 2%, and this inflation will be included from first year. Why we will be including this inflation from the first year? Because the given fixed cost which examiner has given us, it is in current price term. Okay, Velois uses a real cost of capital 8%, general inflation is 3.7%. Now listen to me carefully, student. Again, this concept I have discussed in my regular classes. By using Fisher effect, we can very easily convert real cost of capital to nominal. But the question is, should we convert real cost of capital to the nominal? If yes, what is the reason? Now listen to me. Students, real cost of capital means without inflation. Nominal cost of capital, another name for the nominal cost of capital is money cost of capital, which means with inflation. The question remains the same. Should we convert real cost of capital to nominal? If yes, then what is the reason? Now listen to me, student, carefully. Whenever in the question you have been given more than one inflation rate, repeat, whenever in the question you have been given more than one inflation rate, then you have to use nominal cost of capital. Because whenever you have been given a single inflation rate, then you will be getting the same NPV. Either you are working on real cash flows or you are working on nominal cash flows. But what is the identification? When I have to work on nominal cost of capital, whenever in the question you have been given more than one inflation rate, you have to calculate NPV in nominal terms. So by using Fisher effect, we can very easily calculate nominal rate. Another name for the nominal rate is money cost of capital. Nominal rate is equal to 1 plus real rate into 1 plus journal inflation rate. Whatever comes minus 1. Then whatever comes multiply by 100. So I'm getting 12%. So nominal cost of capital is 12%. So I strongly believe now very easily we can calculate NPV. The finance director is concerned that cost of initial investment may change and has asked for sensitivity analysis to be performed to help to make a decision on VPRO. So we have to perform sensitivity analysis also. But this time examiner is asking us to perform sensitivity analysis on initial investment, which is again very, very simple. After calculating NPV, all you need is take NPV divided by present value of initial investment, obviously the entire investment at time 0. So whatever amount is there at time 0, it is itself in present value terms. Simply NPV divided by, I would say, initial investment will give us sensitivity percentage. Whatever the answer comes, the meaning of that answer or interpretation of that answer would be, if initial investment increases by this XYZ percentage, then NPV becomes 0. will be performing sensitivity analysis. Don't worry at all. In part B, they are saying calculate sensitivity of the project to a change in the initial investment, ignoring tax effect. So they have categorically mentioned do not include the tax impact, comment on its meaning. So simply I'll take NPV divided by initial investment. Okay, fine. Because if the question says you have to include the tax impact as well, then you have to work on, you have to include the impact of tax saving from capital losses as well. But here it is categorically mentioned, ignore tax. So simply we'll be taking NPV, whatever NPV we have calculated, divided by initial investment, that's it. Okay. What else they are asking? Discuss the benefits and limitations of sensitivity analysis and suggest another way to assess uncertainty. First of all, student, try to understand how many things they are asking in part C. Discuss benefits. This is number one requirement. Limitations, number two. Suggest any other way to assess uncertainty three. So actually, when you will be answering for part C, first of all, you should divide that requirement of part C into different parts so that you should know that exactly how many things examiner is asking us. Benefit of sensitivity is number one requirement. So you should be writing around 2 lines, I would say, on this benefit of sensitivity. Then after this, you will be putting a heading of limitation of sensitivity analysis. So you will be explaining what are the limitations in sensitivity analysis. Then there will be another heading regarding another way to assess uncertainty. So you have, while answering part C, you have to discuss 3 areas: benefits of sensitivity analysis, limitations, and you have to suggest any other way to assess uncertainty. So first we'll be discussing part A, B, both numerically. Then I'll explain the entire answer of C to you. Don't worry at all. So let me just share the spreadsheet with you because we'll be solving the entire question on the spreadsheet. Just a minute. Let me pause the video, otherwise the video becomes unnecessarily very long, which is not good at all. Pause recording. Okay, we have resumed the recording. Part A. We are calculating NPV time 0, 1, 2, 3, 4, and 5. Okay. Just a minute. Wait. Part A. NPV is T0, 1, 2, 3, 4, and 5. Okay, fine. Let me remove this. Okay, students. Sales, but for sales, we have to show the working one. Okay. I'm ignoring here 3 zeros for the sake of simplicity. If someone does not want to ignore 3 zeros, it is up to that student, no issue at all. Sales, working one. And let me tell you one thing, students. Wherever it is necessary to show the working, you have to show the working, plus you have to create the link as well. Okay. And try to show the working under your under the calculation of NPV. For example, we'll be having NPV, variable costs, fixed cost, tax saving. Okay, I'm doing working one from here. We are calculating sales. Okay, fine. 1, 2, 3, and 4. Keep watching students sales volume. They have given us sales volume in the first year. How many units they will be selling it? In the first year, they will be selling 10,000 units. Okay. Sales volume growth is 5% from second year. I'm just writing here 10 because I'm ignoring 3 zeros. 10 multiplied by 1.005. Then I'll take this multiply by 1.05. Okay. Multiply by 1.05. Now let's take the selling price per unit. So selling price per unit is 150 if I'm not wrong. Okay, inflation. Selling price inflation is how much? It is 3%. 3% per annum. Okay. I'm just writing 1.03. 1.03 then power 2. 1.03 then power 3. 1.03 then power 4. Now very easily we can calculate sales. Students will take 10 multiply by 150 multiply by this. Now the option of drag definitely should work. So here comes the sales. Now what are we going to do? Come here. We have already given the reference of working one. Okay, as I mentioned, you have to give the reference of the working plus try to create the link as well. Is equal to. Now the option of drag will work. Now, if someone takes 60% of the sale, that student directly gets contribution, which is perfectly fine. On the other end, someone takes 40% of the sale, which is a variable cost, 100% perfect. I'm taking 40% of the variable cost, 40% of the sale to show the variable cost. In this way, presentation becomes a little bit easier. So simply variable cost. Just write 40% of sales. Now I'll come here, take this. First negative sign. Why negative sign? Because we have to deduct the variable cost. Take 40% of this. Now students, the option of drag will work. After this, we have to just show the fixed cost. Let's say that's going to be my working 2. Come here. Working 2. Fixed cost. How I'm just showing this? Look at this. Fixed cost is 2,50,000. Okay. Only relevant is 150 because 100,000 is centrally allocated overheads. It means that we have to take work only on 150. Now what I'm doing, I'm just coming here. Fixed cost is this. Just keep watching. Negative sign, 150. We have to include the inflation, and inflation in the fixed cost is 2%. So 1.02. Now I'll take this 1.02. 1.02. Okay. 1.02. And let me tell you one more thing, student. When you will be solving the same question, let's say on your register by using calculator, which you should not be doing it because since the paper is on spreadsheet, you should be practicing on a spreadsheet. But if you solve the same question on your, I would say register by using calculator, the final answer would differ because when we are using calculator, so we do the rounding of everything, but in Excel, even you do the rounding off, but while calculating the values, Excel takes the entire value. So little bit difference will come when you will be solving the same question by using spreadsheet as well as calculator, but the difference will not be significant, okay? So sometimes students, they get worried just when, as soon as they see the difference in the answer, even though the steps are same, everything is same, still they get a different answer. That is just because of the spreadsheet and the calculator, okay? But you should not be worried about that. Now, student, very easily we can calculate taxable profit, tax payment, and after that we'll go for tax saving from capital allowances. Taxable profit. Let me use the sum formula. I'll be using only those shortcuts which are available in exam because using any other shortcut which is not available in exam, so there's no benefit, okay? That is why I'm not using that. Student, tax is paid with a delay of 1 year. So tax payment at 20%. Negative sign, take this, multiply by 20%. Now the option of drag, I strongly believe should work. Now students, tax savings from, let's say, tax depreciation. That is going to be working 3. Let's come here. Working 3. Tax saving from tax depreciation. Let's say time, I've got 1, 2, 3, and 4. Tax depreciation. Initial investment is 1,200. I'll take 25% of this. After that, student, if you recall, I did mention just take the 75% of this. Use the shortcut. Then take 75% of this. In the last year, we have to take the balancing figure. 1,200 minus all the tax appreciations which we have already claimed, minus the scrap value also. Here comes the tax savings. Tax saving will come from the second year because tax is paid with a delay of 1 year. So we'll take 300, multiply by 20%. Then simply take 225, multiply by 20%. This, multiply by 20%. And the last one, multiply by 20%. Okay, fine. Now come here. I'll take this. Okay. Now let's take the initial investment. Initial investment. We have to show initial investment at time 0 minus 1200. Then let's take the scrap value. 200 in the fourth year, because last year of the project. And sometimes student even they make mistake in scrap value, because if the project life is 4 year and the impact goes for 5, some of the student, I don't know why, they show scrap value in the year 5, which is incorrect. The project life is 4 years, so scrap value will come in year 4. It will not come in year 5. In year 5, you will be having only the impact of taxations, because tax is paid with a delay of 1 year. Now, should very easily we can calculate, I would say, net cash flows, total cash flows. So I'll take this 1200. Here, student, when you will be calculating total cash flows, so kindly make sure that you have already net off the sales, variable cost, fixed cost. We have already net that off. So I'll be taking, logically, I'll take taxable profit. Keep watching. Plus tax payment column, plus tax saving column, plus this column and scrap value column. Why I'm doing this? Just to create a shortcut. Now the option of drag should work for us. That's why I did this shortcut. Now here we can now easily calculate the NPV. How to calculate the NPV? By using a shortcut of NPV. But before using a shortcut of NPV, let me just give you one thing, that we have to show our examiner what is our cost of capital. So working for cost of capital. Student, they have given us real cost of capital 8% and journal inflation 3.7. Okay. Nominal rate simply 1.08 multiply by 1.037 minus 1. Whatever comes, if you convert that into a percentage. So actually we are getting nominal rate 12%. Okay, fine. Now we need to calculate NPV. Okay, fine. What I'm doing, I just want to adjust here. Okay, let me just adjust this. Give me a minute, please. Okay. Taxable profit, tax payments, and tax appreciation. Taxable profit, tax payment, tax saving, and scrap value. Cost of capital. Student, cost of capital is 12%. And let me show the working reference as well. I think it was working 4 if I'm not wrong. Now you should be using the shortcut of NPV. Now listen, if someone does not want to use the shortcut of NPV, then you have to write all the discount rate and then you have to be calculating the NPV. which is also acceptable. But it's better to use the shortcut of NPV when it is available. So why not to use it? NPV. So how do you calculate the shortcut of NPV? Is equal to just write NPV. Now they are saying select the rate. I've selected the rate, comma. Take the values from T1 till T5. T0 value does not need any discounting because it is itself in present value terms. So from T1 till T5, bracket close, then take the T0 value. Why it is coming in percentage? Because we have selected percentage. So let's convert that into dollar. So students, I'm getting NPV. We have ignored 3 zeros. Don't forget this. So NPV we are getting is 1253.41, which is positive. So we know that if the NPV is positive, we should opt that project because financially it is acceptable. Why it is acceptable? Because it will actually increase the wealth of shareholders. Okay. So I just want to write here one comment. No issue at all. Otherwise, you can write here also. NPV. NPV is positive. Okay. NPV is positive, which will increase wealth of shareholders. Therefore, accept the project. So simply this project should be accepted. Okay. Now let's go for part B. Student, now part B. Actually, the entire part A was, I would say, a little bit time consuming. In part B, they are categorically asking just sensitivity analysis, and we have to simply ignore all the taxation impact which they are saying. So simply, how will you perform sensitivity analysis? NPV divided by initial investment. Okay, just a minute. Let's go for part B. Sensitivity. So sensitivity on initial investment. You have to write a formula to show your examiner exactly what are you doing. NPV divided by simply initial investment. Logically, it is the present value of the initial investment, but we know that entire initial investment is going to be incurred at time zero. So it is itself in present value terms. Okay. So if someone is even writing present value of initial investment, that is perfectly fine. But don't forget at all, the entire initial investment we are going to incur at time zero. So it is itself in present value terms. So NPV, which we have calculated, let's take it is this divided by initial investment is 1200 multiply by 100 so that we can get the answer in percentage. Now convert that into a percentage, not in a number. Just a minute, just a minute. Okay. So value of the NPV is 1253.41. 1253.41 divided by 1200. I'm getting 104%. Is that clear, students? What is the interpretation of this 104%? The interpretation of 104% is if your initial investment increases by 104%, only then NPV becomes zero. And logically, it's a very big rise, unlikely to be incurred. So, what is the interpretation of this 104%? Let me repeat. The interpretation is if your initial investment increases by 104%, only then project NPV becomes zero. So, simply, if initial investment increases, let's say, by 104%, only then. If initial investment increases by 104%, then NPV of this NPV of project becomes zero. Obviously, you can say that it is highly unlikely to be a concern for the company. Why? Because it's a very big rise. 104 is a very big rise, which means that 104 rise in initial investment is unlikely to be incurred. So it's not that easily because rise of 104 is a really big rise. So 104% rise in initial investment is unlikely to be incurred. Okay, or you can instead of this you can say that's 104% rise in the initial investment is a big rise. So this should not be a cause of concern for the company because normally project they will not have such a big rise in their initial investment. That is part B. Now let's come for part C. Student, part C, now listen to me carefully and then you have to write in your own wordings. I'll explain you. Number one, the entire answer of part C you have to write on the spread on MS Word. They have also given you the option. You can see that it is MS Word. So part C, entire answer you have to write on MS Word. Now, let me go back to OneNote and explain the entire part C to you. Okay, just a minute. Let me explain. Part C, I'm just giving you the answer plan that what are the benefits of sensitivity analysis. Now try to understand. I'm just explaining you, okay? For example, if we have performed sensitivity analysis on selling price, variable cost, and let's say fixed cost, assuming assuming if the question says that selling price if drops by 2%, then NPV becomes zero. Variable cost rises by 15%, then NPV becomes zero. Fixed cost increases by, let's say, 12%, NPV becomes zero. Now try to understand. Assuming I have performed sensitivity analysis on these three key variables, and these are the findings, okay? As soon as you see that selling price drops by 2%, NPV becomes zero, then obviously your company can decide one thing, that out of these three variables, the selling price is the more critical variable. Because the smaller the change in the variable brings NPV zero, it means on that variable, your project is more riskier. So what is the benefit of sensitivity analysis? The biggest benefit is once you have performed sensitivity analysis on all the key variables, you will get to know that which variable is more critical for this project. Like here is an example: if selling price drops by 2%, variable cost increases by 15%, and fixed cost rises by 12%, and NPV becomes zero. So we can say out of these three critical variables, selling price is the most critical variable. So it acts now. What is the benefit once we know that which variable is more critical for us for this project? The benefit is you can set the priorities that on which variable we need to be focusing more. Like in case of selling price, if we know that if the selling price drops by 2% and NPV of this project becomes zero, it means the project is very risky. Selling price could drop due to any reason. So if there is any possibility, we can have agreement with the customers regarding, selling price, then we can then we can save ourselves from this, I would say, risk of drop in the selling price. So what is the benefit? The benefit is once you have performed sensitivity analysis on number of key variables, then you will get to know on which variable your project is more risky. Then you will be, of course, once I know that on which variable my project is more risky, then I'll be thinking how to save my project from that risk. So that is the benefit. Now, what are the limitations? So limitations, if you recall, number one limitation is sensitivity analysis. It is applicable only on one variable at a time. Repeat, it is applicable on one variable at a time and assumes all other variables are constant. So I'm repeating for you limitation. You can write in your own wordings. Sensitivity analysis is applicable on one variable at a time and assumes all other variables are constant. Now you can say that practically variables are interlinked. They are not constant. For example, if the selling price drops, you can explain more to your examiner. For example, if the selling price drops, then sales volume will increase, law of demand. When you are reducing the prices, then obviously the sales volume will increase. So I'm repeating the limitations for you again. Sensitivity analysis is applicable only on one variable at a time, assumes all other variables are constant. Practically, the variables are linked. For example, if the selling price drops, then obviously sales volume will increase. That is one of the limitations. Another limitation, you can say that sensitivity analysis, actually, like in part A benefits, I said that if we have performed sensitivity analysis on selling price, if the selling price drops by 2%, variable cost rises by 15%, fixed cost rises by 12%, NPV becomes zero. The question is, what are the chances the selling price will drop by 2%? What are the chances variable cost will rise by 15%? What are the chances fixed cost will increase by 12%? Another limitation is sensitivity analysis. It does not assess what are the chances of variable changing. Repeat, it does not assess what are the chances of variable changing. It will not give you the probability that what is the probability that selling price will drop by 2%. What is the probability that variable cost will rise by 15%? Sensitivity does not give this information. Another limitation is sensitivity analysis does not give us any decision criteria. What do you mean by it does not give us any decision criteria? For example, if the selling price reduces by 2%, NPV becomes zero. Should I accept that project or not? Sensitivity will not help you in this. It is you are the one, your company has to decide either accept the project or not. If the variable cost rises by 15%, I know the level of risk, but the question is, should I accept the project or should I reject the project? Sensitivity does not give you a decision criteria for accepting or rejecting the project. That is another limitation of sensitivity analysis. So we have explained the benefit, limitations. Now, come here. Suggest any other way to assess uncertainty. Now listen to me, students. Any other way to assess uncertainty, we do have that way, and name of that way is simulation analysis. The name is a little bit different, Monte Carlo simulation, but instead of using Monte Carlo simulation, you just use the word simulation. Now listen, students. Actually, uh, by using simulation, multiple variables can be changed at the same time. In sensitivity analysis, what happens? At a time, only one variable could be changed, and we assume all other variables are constant. But when it comes to simulation analysis, that is Monte Carlo simulation, multiple variables can be changed at the same time. We can actually use simulation to calculate thousands of possible project outcomes. But obviously, simulation, Monte Carlo simulation, you cannot do it manually. For that, we need experts. Okay, you just need to know one concept, that by using simulation model, Monte Carlo simulation, multiple variables can be changed at the same time, and when we can see the impact on NPV, we can get thousands of outcomes of NPV. So that is all about part C. Student, I'll do one thing. Immediately after the class, I'll ask the admin to share the answer of at least part C. In fact, to share the entire answer of, I would say, this question, part A, B, and C. Immediately after the class, in your relevant, I would say, WhatsApp groups, admin is going to share the answer, examiner answer of part A, B, and C, so that you can compare your answers, my answer, presentation, explanation, and after even you have seen, let's say, examiner answer, if you have any confusion in any calculation, any confusion in any explanation part, you are more than welcome to ask question in your relevant WhatsApp groups. So that was our first class for the September 26th session. Student, in today's class, we have revised, I would say, the topic of NPV with a touch of sensitivity analysis. We have also seen how to incorporate inflation, when to incorporate inflation from the first year, when do we incorporate from the second year. Plus, I have tried my best to show you more than one presentation to do the same thing, so that by looking any different presentation of your examiner, you should not get confused. In the coming week, students, we'll be covering, inshallah, we are going to cover investment appraisal, plus we'll be going for the remaining topic of investment appraisal, plus we'll be starting the cost of capital as well. But don't worry at all. Admin will share the message at least 3 to 4 days before the class. So thank you very, very much that you people have taken out time for today's live revision class. Thank you.